Welcome to our review of markets and things that we've been thinking about when looking at your portfolios over the last 3 months. This is for the quarter ended 30th of September 2019. It's been a volatile time during 2019, but certainly the markets have performed quite strongly during the last 12 months or so. And despite some shocks which happened in the last quarter of last year, since the 1st of January 2019, we've actually had a situation where markets have performed around about 18% increase over the 9 months to date, and that's been a very, very strong performance. Now that's really in the face of some fundamentals which might have had negative effects on markets. It just shows that the markets are quite resilient at the moment, but there is a great deal of volatility around. Since 30th of September, there were a couple of occasions where we've had quite serious shocks in terms of portfolio valuations, but then the market has continued to march upward and onward. The thing to be very aware of is that this isn't going to go on forever. Our markets are going to be impacted eventually on all of the things that are going on in the world. So we have tensions in the Middle East, we have trade wars between the US and China. We'll expect some fallout from what's going to happen in Brexit in terms of EU and Great Britain. So things are really marching forward at a time when there are a number of rain clouds on the horizon and things that are going to have some impact at some point. Unfortunately, we don't know when that point is. So the thing is to make sure that our portfolios are structured appropriately to take account of some shocks, that they're aligned with our risk profile, and that we have some defensive parts of our portfolio as well as the growth parts which give us the returns that we're looking for. In Australia, the markets have been particularly strong, but have been impacted somewhat by the situations in China, and there have been a number of things which have impacted on our markets here locally. But in general terms, when looking at the Australian market compared to what's been going on in the rest of the world, we've been pretty closely aligned with that. The Reserve Bank in Australia, though, thinks that the Australian economy is quite weak, and we've seen over the last 5 months that there have been 3 significant reductions in interest rates, with interest rates at present being around about 0.75 of 1%, which is about as low as I can ever remember throughout my career, and that's a very long time. So obviously the Reserve Bank is attempting to stimulate the Australian economy and also to actually put some pressure on people to start to invest again. With interest rates being so low, we would hope that people will be starting to invest not only in a business sense but also in terms of real estate. You'll realise that, of course, that Australian real estate declined quite seriously, particularly in capital cities towards the end of last year, but there are some signs right now of a recovery in that. So what's going to happen into the future? Well, no, but none of us can tell. Our crystal balls don't work. We have no idea what's going to be there into the future. We're certainly keeping a closer eye on your portfolios now than we would normally do, particularly because there could be some impending shocks. If there are any changes that we need to make, obviously we'll be in touch with you. Hope you enjoyed this commentary. Look forward to talking to you again soon.